What's going on? Welcome to Making Sense, where I try to make sense of whatever the hell is going on. Now, I wanted to make this channel as a way for me to, I think, properly have a place to record what it is that I'm thinking about, what might end up happening with the markets, or just any information that I need some place to clarify, I believe. So that's what this channel is going to be. Now, these last few days have been very interesting. This past week has been very interesting. And then the Friday before that has been something that has been setting us up for ending in October, or beginning in October, I mean. So here are some of the notes that I want to regard as we get into October. Now, one of the biggest things is most major stock market crashes have happened around October. So that's a common fear that kind of goes along with this, but it doesn't matter per se because, if it crashes, and no one's really going to be predicting that per se. There's information regarding it. You can start, you can start winding yourself up into something like that, but you have to take a look at different pieces of information. Now, when I trade, I use indicators to some extent, not really that much. It's mostly price action and then news, information, catalyst, stuff like that. So, and volume. Volume is like one of the most important things, which I don't even have here. So, that's great. So one of the things we want to know about October is, at the very least, October is one of the most volatile months of the year. Oftentimes, I think the entire market will move about 1% total net in some direction, usually down. But what we're probably going to find is that it doesn't stay stagnant for the whole month. Rather, it moves quite volatilely in multiple directions. You can see it right here that it already moved starting October 2nd and October 1st. We've moved already, like 3% up? 1% up? I apologize. So stuff like that is kind of important to note, that we're going to be seeing a lot of up and down this month, which is actually very good for selling premium on options and things like that. But let's actually get into some of the news so far. So most recently, what we do know is, as of yesterday, Friday, October 4th? Friday, October 4th, Jerome Powell had spoke at a meeting. It wasn't a Fed meeting. It was just him elucidating some things about what is going on with how they're going to be reacting to certain things that are going on in the market. So as the markets start to come down, we need to know whether or not the Fed will take action aggressively, or will they let it happen as it should be, not as it should be, but as it would. And those are some things, those are some key points that you want to pay attention to, is how these people speak. When Powell says something, is he hawkish? Is he dovish? Is he expecting the market to grow, or is it not? And what we've seen recently, as of that Friday, or not that Friday actually, right here, this was Thursday, October 3rd. So the market had opened up green, I believe. Yeah, had opened up green. We opened up a bit higher than we closed. We had already come down quite a bit because we had hit 300 earlier in the weeks, I think 2 weeks ago. And what ended up happening was the markets opened up, they started green, and then the ISM reports were released. And the ISM reports had crashed the market quite a bit. It ended up having a very nominal effect. It didn't do much, actually. So the market actually did not care. And there's actually a reason for this happening the way that it did. And I'll get into that in a minute. But first, let's take a look at these ISM reports. So the ISM report is the Institute for, Manufacturing, Supply Management. So what they release is stuff like the PMI. So the PMI is the Purchaser Managers Index. They indicate whether or not we're producing enough relative to how we were in previous quarters and things of that nature. So what's been going on lately is the ISM report that was released of that date had actually indicated that our production had been contracting. The economy is still growing per se, but it's not growing at a faster rate as we'd expect. So these numbers, it is below 50, I believe, right? Below 50 by some extent, so we are kind of contracting, but more or less the way this is taken is, how is the market behaving in general? And I think if you guys would remember, back in August, so way back here, back around this date, the yield curve had inverted, and now everyone was freaking out about the yield curve, blah blah blah, this, blah blah that, the 2-year under the 10-year, blah blah blah. Those or 2-year over the 10-year is what the idea was. Now, when you imagine the yield curve, the important thing to note here is it doesn't actually mean anything. It doesn't itself, in itself, it doesn't mean anything. It's just indicating a behavior, and that behavior is that the market is behaving in a very short-term behavior. That means the amount that it is receiving. So what that means is for example, in the way that I view a yield curve inversion, the 10-year could be 1.406, and these could be flipped. So that means the 2-year is yielding a higher percentage. Now, the reason that is a bad thing is because what that means is, in the short term, we are getting more out of a short-term treasury bond than we are out of the long-term treasury bond. And what that means is the market is playing a very short-term game. And when the market plays a short-term game, you will see what we've actually been seeing is these short-term spikes followed by these longer little drop-offs. Now, there are certain pieces of information that have been holding us up, and a lot of that has been repeated talks about the trade war and how they're going to resolve it and how that should stimulate the economy after that is resolved, and other things such as the Fed rate cutting rates. And as of now, with the recent report of the ISM, it actually does seem like the futures are pricing in a Fed rate cut. There's a 78% chance that they're going to cut rates. That's just what the futures are pricing in. And that is actually really interesting, because that means the market is not growing in the way that we are led to believe that it is growing. We need these cuts, according to the market. The market wants these cuts in order to stimulate a growth. But this growth is becoming, I believe, a little bit artificial. When the market starts coming down, and a lot of the time it can be actually because of Donald Trump tweeting something. When he tweets something, the market does come down, or goes up, depending on how he talks about China. Now, what happens here as well is this actually lays to hand that he has some influence over Jerome Powell. Fed Powell is trying to make a clear and decisive decision about whether or not cutting rates is the correct move, and Donald Trump will criticize him for not believing that is the way. And when he does that, this creates a lot of pressure. Whether or not that has a genuine effect, I cannot be sure at all, but it's something to pay attention to, because regardless of that, his tweets do have an effect on the market in a very large way. Whether or not those ways are impactful over the long term is, again, like I said, everything is being very short term, and you can see that with the volatility in this market. This isn't even October. October is going to look like worse. It's supposed to be worse than this by a lot. So we'll see. Now, along with that, we have the trade war, which is with President Xi and President Trump, who are discussing whether or not they're going to be able to resolve something like this. This is very clearly it's just a tactic. They're both trying to play to each other as best as they can to benefit from this as much as they can. A lot of what Donald Trump's presidency up until this point has been, pushing up the economy as much as he can, and that economy in his eyes are the main the indexes. So he's been pushing these indexes up. I mean, after following the drop in December and November, which happened as a result of the trade war, we've been pushing ourselves up until this point. It has become a tactic to kind of shove ourselves back up and up and up. So trying to hit all-time highs, which we've actually done very recently, and then come back down. So those are things to pay attention to. So like I said, and then there's another piece of news, which is the impeachment threats. The impeachment threats have actually created a range. This actually does not go back far enough. Let me set it a little bit longer. Actually had created a range here where for some time we were actually quite stuck. We weren't able to break these ranges. We were moving back and forth between them as a result. And as a result, we've actually officially kind of broken in and then back out and then back in again. Now, what that range means doesn't really matter. It doesn't have that much of an effect, but it does mean that the impeachment threats are having an effect on the market. Now, the Fed expected cuts, we just went over that. The earnings reports are just going to be if companies start producing, high, like good sentiment earnings, then we'll start seeing maybe the markets start coming up. We got bigger stocks like market stocks like Apple, who have been releasing. Yeah, Jesus, I have so much stuff here. Different pieces of information, like them releasing the iPhone 11 had ended up pushing the market back up. Apple has reached 227, which I believe is not an all-time high for Apple, but it's very close. We're very close to hitting all-time highs again for Apple. And then Amazon is not actually performing the same way at all. And this is interesting to see a divergence like this in the market. I mean, you can't really tell what's going on here, but it doesn't once again matter. What's happening is the market's coming down and we're hitting these lower and lower points. This huge wick here, and like I said, I'm not huge on indicators, but I do like price action, and this wick is some very powerful buying pressure. So that's where we're catching. I do think Amazon is probably gonna like whipsaw around really kind of hard soon, and I'll explain why in a second. But with all this information, you want to pay attention to the chances of a Fed rate because, like I said, and I didn't mention earlier, but after the ISM reports were released and it brought down, then the market came back up very strongly. And this is not SPY, this is actually Amazon. So the markets are following, they're leading and lagging very strongly. The correlation is very strong at the moment. But this coming down here and then being pushed all the way back up to 294. This is over $10 for SPY over the course of 2 days, and that's quite a lot. What is that? That's 3.5%. It's okay actually, but this move is still very interesting because it's got very little downside on it right now, and the reason is because of how certain a lot of the market is about whether or not these Fed rates are going to be these interest rates are going to be cut or not, and that's something that's driving a lot of this. And so we're going to be finding out on October 30th whether or not they actually end up cutting rates, and they most likely will. And you'll see a hike and then a down run, and then following that we might actually see a down run that cannot be prevented anymore. But that's for later. I have to wait. We need more information. We don't have that yet. So we're going to find out for sure what really goes on. Okay, and then CNBC bond rates is really good for keeping up with everything. There's a lot of other countries like Germany and UK who actually had inverted some time ago and have remained that way. So paying attention to the international markets is very important. There's also a currency called the yuan, the Chinese yuan. And if you watch, actually, let's look at the Shanghai Composite. When you look at the Shanghai Composite, you can actually see what's been going on with their behavior over the last, however long. So this is from 2016, so this doesn't matter. But what's going on as of right now? Why is this so terrible? But you can look at, a lot of the time, sometimes we actually have a very strong correlation with the Shanghai Composite, and that's pretty interesting, actually. As the Chinese yuan starts to go up, the goes down. So as the yuan weakens, that actually does affect our economy quite strongly. So paying attention to that as well is really important. So now one final thing I want to note, and this is a technical indicator for me. There's an indicator called the TTM Squeeze, and basically what it does is it tells you when something is squeezing, when something is going to be squeezing up, and it has a fairly strong I don't want to say the word, it's not a delay, it's actually the opposite. It comes in quite early, and it's usually, so for example, I'll show you. Here, it's red, right? So it turns red very infrequently. But then once it turns green, and whatever direction it faces is the direction that the stock should be squeezing up. This is the index, so that's what the index is doing. And SPY does follow this fairly strongly, actually. And it showed up, and it came back up, and then it actually came right back down. And now, based on what I've seen in the past, any other times that this has happened, so the only other time has been here, at least in this year, I'm way too close, you can see that it indicates a downward squeeze, and then it does really squeeze downward quite a bit. And you can play those. You can buy options, or you can purchase the stock accordingly. I think that Amazon has a similar indication like this, and it does follow it fairly strongly. And it did once before. So right here, we indicated it was going up, and then what happened? It went up, and it came right back down. But then, following, it actually started squeezing way the hell up, and it came all the way up to its all-time high that it's ever been. Now, I mean, we can't really consider this the same. This is more this trend here. But regardless, it is a working system. And I do think that, this price action is showing me that I think Amazon and SPY will probably be coming up in the more recent weeks. And so it might actually squeeze up quite hard, especially with the news about the trade war, and because the trade talks are going on in this following week. So that, and then the interest rates. So things like that should be deciding what's going to be going on. There's a lot more information that I need to kind of clarify and reach out. But this is, the first video, so we'll see what we can do with this. So, yeah. Thanks for watching. Don't do anything. I don't really care.